In this video, we'll be talking about agreed upon procedures ISRS 440. Agreed upon procedure engagement is an assurance engagement in which the client hiring the practitioner specify the procedure that should be followed by the practitioner in performing the engagement. Agreed upon procedures is mostly used by small and medium scale enterprises. For example, the practitioner may engage to help the client evaluate the validity of their account receivable at a certain date. The procedures may include checking the figures in the trial balance of account receivables prepared by the client at a specific date. In an agreed upon procedure report, the practitioner does not give an opinion or conclusion. They give the results of their findings requested for by the client. This is as against the reports issued in an audit or review. In an agreed upon procedure engagement, an engagement letter is also issued to the practitioner just like in audit and review. The content of the engagement letter must contain the nature and purpose of the engagement. This nature and purpose must specifically state that this is an agreed upon procedure and not an audit or a review. The procedures to be carried out by the accountant and the information to which accountant is required to apply these procedures must be stated in the content of engagement letter. This information can be inventory record, accounts payables, the company's accounts receivables, and any other record that form the subject matter of the engagement. The form of the report to be issued at the end of the engagement and agreed limitations on the distribution of the report. Because in an agreed upon procedures, the report to be issued is limited to the intended users and not for the general public. In order for the public or any other users apart from the intended users not to misinterpret the content of the report, the limitations must be stated that this is an agreed upon procedure report and not an audit or a review report. Agreed upon procedures usually follow the same process as audits, such as planning and documentation, collecting evidence, reaching a conclusion, and preparing a report. However, the volume of work undertaken by the practitioner will be lesser than that of an audit, since there is no assurance involved, unlike audits. Therefore, the cost will be lower and the number of staff will also reduce compared to an audit.